Good afternoon, I'm Brigid Taylor and this is Currency Wars. Today I'm joined by Andre Eerenstein from RMB and Luke Alers from Kaon Capital. Let's have a look and see what's happened in the markets this week. Post exceptionally poor non-farm payroll data out from the US last Friday, we've seen the US dollar come under severe pressure as markets have pushed out expectations of a Fed hike to the end of 2016. Meanwhile, the ECB, European Central Bank, has been buying corporate debt in Europe, and this is supporting the low rates that we're seeing as the Eurozone remains fragile. Meanwhile, in the UK, similar scenario with gilts coming under pressure as the Brexit concerns become heightened ahead of the referendum that we're expecting a result from on the 23rd of June. The pound remains weak ahead of this decision. Back home in South Africa, we saw the GDP print yesterday and it was remarkably lower than expectations. However, on a positive note, we did manage to dodge a bullet and remain investment grade for the next 6 months. Despite the nature of the domestic economy, both government and business sectors are starting to make a concerted effort to realize improvements in the South African economy. Both Mr. Gordhan and Mr. Ramaphosa are actively pursuing engagement with the private sector to enhance stability and growth in South Africa. The Rand has gained 80 cents this week, and post the poor non-farm payroll data and the positive ratings results, our bond market has also rallied as a result of the renewed investor appetite for our yields as global rates remain low. The Rand is supported at around 14.72, and we're watching risks as commodity prices increase as well as offshore developments remain volatile. Right, guys, so we're going to talk about what's happening in the markets. There was a lot of news out last week, so we've had time to digest. We had Fitch yesterday, which was relatively expected. But Andre, just talk to us about this whole ratings agency outlook. I mean, everybody's had similar scenarios, similar things to say about South Africa. Nothing for us has really changed, but it seems as though people are getting serious about the situation with regards to the concerns around what it means for South Africa to be downgraded.
Yeah, I think there are a couple of points that highlighted from the ratings agencies. One is the growth outlook, which remains a big risk. And we had negative growth numbers yesterday for the first quarter, and I can't see them reversing for second or third quarter. So that remains a very big risk for the rating agencies come December. The other point that they go on about is the political instability. There's a lot of infighting, and that makes investors, very edgy. There's got to be certainty, there's got to be good policy, and more importantly, there's got to be good policy implementation. And without that, we're not going to see the growth rates that we need, and that's really going to make the rating agencies' decisions come December relatively easy.
So if we look on a positive note, though, we've seen the likes of Mr. Ramaphosa getting involved with business on a level of talking about how we're going to get sustainability in the economy. We've seen what Pravin Gordhan's done to this point with regards to lobbying with the ratings agencies, trying to allay some of the fears that they had around the South African economy. However, we are in an election year, Luke. So talk us to what the risks are around that. Are we in fool's paradise, or do you think that we do have an opportunity to turn this boat around?
Well, look, there's always an opportunity to turn the boat around. But as you said, in an election year, it's going to be difficult to do the things that are necessary to make things work. Reforming labour laws, sorting out tax receipts, etc., and then also obviously government spending. And in an election year, the government is going to be spending to get re-elected ultimately. So I think there are headwinds to the story. I think Pravin Gordhan is committed to trying to make it work. The question is, how much pushback he gets from the rest of the people.
So he's finance minister and he owns the coffers. However, the reality is that government has to come through in terms of delivery. So it's not just about Treasury handing out cash, it's also about those that are given the cash in terms of what they actually deliver. So talk us through that.
Service delivery. Yeah. At the end of the day, Treasury can allocate budget, provide funding, but ultimately it comes down to grassroots service delivery. And if that doesn't happen, it makes political issues, it brings political issues to the boil. And that's what we're seeing globally around the world. People are getting very irate around the immigration issues. If you look at the European politics, you look at the US politics, all of it means it's pointing towards the right, and it's basically going towards protectionism.
Yeah. And that's the thing. I mean, if we look, let's bring our eyes back, because if we take our eyes off South Africa, so we've got our own internal issues that we have to deal with. But I think a lot has been forgiven, and we've certainly been in a good space with regards to the non-farm payroll data that came out really negatively, as well as the ratings agencies not downgrading us. We're sitting at Rand back at 14.72. We've got support because you're looking at gilts coming off. You're looking at the Eurozone supporting their bond market. You're looking at a push out of the Fed interest rate hike. So all of that speaks to strengthening of currencies that have got a high yield, of course, one of which happens to be South Africa. Those inflows, do you think that will continue to protect us and give us that edge with regards to the currency rate that we currently have, because we still offer a relatively good yield and we're going to be forgiven politically? Or do you think that it's still a risk that we run?
It's definitely a risk that we run. I think when you look at the rand has rallied back hard. Yeah. Bond yield on the 186 has dropped essentially nearly 50 basis points over these 2 points. The markets have repriced, but then we've got to look at those non-farm payroll numbers and saying, right, is it a blip? Is it not? There was a Verizon strike in the US.
Yeah.
No one really knows how that impact those job numbers. We could actually see job numbers next month back to 200 plus revisions. So yes, we are okay for the next few weeks.
Yeah.
But I think if the non-farm payroll numbers turn around next month, I think it's going to put the Fed in a very difficult decision. And they might, if non-farms printed 200,000 plus again, they might have to move in July.
Yeah.
They can't afford to wait to September. So we've got to watch the Fed very closely and see, because they look for trends. They don't look at one particular point on the data calendar and say, right, okay, now we've got to adjust monetary policy accordingly.
Well, we had the ADP number that came out the day before, and that was very surprising because we saw a really good result in ADP. And normally that's a good precursor if we look at non-farm payrolls thereafter. And that was, I think, what caught the market so off guard was, one, that it was a disappointment, but it was such a severe disappointment. I think you're right. So let's think about where we are currently. We've been forgiven for a lot of what's happening in the South African economy, but I think if we look at South Africa now, we've got a great benefit because we're seeing those funds moving in short-term, uncertainty in the UK around this Brexit decision. We've got the possibility and people pricing for this no Fed hike in July. All of that speaks to support of the rand. Talk to me about the risks that you see. So if we look on the other side, we're also a commodity-based emerging market. We're starting to see commodities come back online, and it's a little bit of a volatile trade if you look at gold, but if you look at the oil price, that's come back online. So that all speaks to commodity rally, which potentially also could be positive.
Yeah. And I think that's something to bear in mind. Looking at the first quarter GDP numbers in South Africa were minus 1.2%, very bad. But it was a bad quarter for the globe, essentially. The commodity prices have rebounded since then. So I think there will be some respite on that. But I think, as Andre was saying, it's not going to suddenly return to positive GDP growth, just swing around. So I think there is some impetus that will feed through, but I think the overall picture is still concerning. But the ratings decisions, I think there was a lot of negativity priced into the ratings decisions. We've seen the rand rebound a lot after that, but I think it should stabilize a little bit for the near future, I think.
So we're predominantly going to be driven by global forces. I'm going to put you guys on the block now to make a decision around where you think rates are going to go. I know it's a tough one, but just talking about good base levels, if you can give our viewers something to look at in terms of nice technical levels that we can watch, just with regards to buying dips or selling upper end ranges. Stay with us. We're going to get the roll of the land. Okay, Andre, I'm going to start with you.
Yeah, I think for the next week or so, I think we'll see rand test lower. I certainly think the sentiment is there for it to test lower. So I think when you look at 72, if we break that, you look at 60. If you break that, you kind of open up to 14.10, 14 the figure. And I think ultimately a very long-term target is like 13.80.
Do you think there's a probability of that?
Yeah, I think it depends on how things base, and it depends how things develop globally. I still think fundamentally in the longer term, I think you buy dips. So at 70, I think you engage, and if we get down to 14 the figure, I think that's certainly well worth looking at hedging.
Okay, awesome. And you, Luke?
So generally the same sort of view. I think buying the dips. I think, you know, from what I've seen, it looks like sort of 65 is a level. And then if it breaks through 1465, could go down to about 1440. Look, I don't think it's going to head down to 14. I think that we've had a good retracement, but I think that, you know, longer term, I do think that the rand will sort of grind higher. So definitely look to buy dips, and, you know, for me, if it gets down to the 1440 level, I think it's a good level.
Thank you very much, guys. I really appreciate that. So in conclusion for the week, we're looking for opportunities to buy dips. South Africa's rand is performing well relative to other currencies, particularly watching offshore risks. Watch news around Brexit, watch news around the statements coming out of the Federal Reserve. Those will be the big drivers. And then, of course, watch the commodity prices. For now, watch 1465 on the downside, and good luck in the markets. I'd like to thank my guests, Andre Eerenstein and Luke Alers. And if you'd like to send any of your questions or comments, you're more than welcome to do so at Currency Wars 410 or to myself at Kaon Capital for your personal response to the FX markets. Until next week, good luck in the trenches.